Hello and welcome back to goldstocktrades.com. Today we have a returning guest with us, Greg Johnson. Greg is CEO of Wellgreen Platinum. Wellgreen can be traded as WG on the TSX and as WGPLF on the OTCQX. Thanks, Greg, for being back here with us today.
It's great to be back.
Greg, talk to us about what the management team at Wellgreen has been able to accomplish since you guys have come on board a few years ago. Talk to us about the value created and some of the technical work that has been done on the Wellgreen project.
Well, I'm sure as your listeners and readers know, it's been a pretty challenging marketplace the last couple of years, but a whole new team came into Wellgreen just a little more than two and a half years ago. During that past 2.5 years, we've been able to raise, close to $40 million in a very difficult market. That money has gone into the ground towards further improving our understanding and confidence in the resource and economics of our Wellgreen project located in the Yukon. It was recognized as a historic producer, a high-grade underground occurrence, that this project had a significant PGM nickel potential. And since the late 80s, the focus has shifted to looking at its potential as an open pit. Work in 2010 and 2011 highlighted that this had the potential to be a significant open pitable resource, but a large part of that resource was inferred material. So a lot of our focus has been on drilling off that resource to bring it to the current level. Successfully, we moved about 75% of our inferred material into the measured and indicated categories, more than doubled the total size of the resource over the last couple of years, and demonstrated that we had a very large system, over 5 million ounces of measured and indicated platinum, palladium, and gold. And that comes along with about 3 billion pounds of nickel and copper at the measured and indicated category. And then in inferred, we have another almost 14 million ounces of platinum, palladium, gold, and 7 billion pounds of nickel and copper. So there's a very significant resource that's been developed. In addition, we undertook to complete additional metallurgical testing to understand the recovery characteristics. And when you wrap all that together in the PEA that we just published this week, it basically shows that Wellgreen is not only a large resource, but that it has the potential to become one of the largest and lowest cost open pit PGM nickel producers globally, particularly outside of Africa and Russia. So it's been a pretty exciting couple of years for us. This is really, quite a major milestone for the company. The market conditions being as they are, we don't often see big changes in value in these companies, today, but that's just an indicator of where we are in this sector. I think as people start to digest the significance of the news, the level of PGM and nickel production that we're seeing from our base case, the low cost at under $500 an ounce, which would make us one of the lowest cost operators globally, the high level of annual operating cash flow the project's going to generate. All of these things I think are going to really highlight the tremendous value that's built in to the Wellgreen project, and what a rare beast it is as you look globally at other systems, which are mostly in South Africa and Russia.
Greg, in terms of the fundamentals behind platinum and palladium, based on the 2015 PEA, the Wellgreen project could be one of the two largest platinum-producing mines outside of South Africa and Russia. Could you discuss about the unique fundamentals behind the platinum and palladium market?
Yeah, these are, platinum and palladium are quite different than the other precious metals, gold and silver, in terms of their fundamentals. The largest single use of these two metals is really its industrial use in auto catalytic converters. And so what that's meant is we've seen pretty much year-on-year growth of about 4 to 5% since the mid-1980s, and that growth has basically corresponded up until about 8 to 10 years ago with increased mine supply, to meet that growth in demand. But since about 2006 for platinum and since about 2004 for palladium, we've basically seen falling mine supply, which has meant that you've created a supply-demand imbalance in which we've got about 1 million ounce a year deficit in terms of the total demand versus total supply for each of these two metals. And that's a result of the very high-cost nature of mining right now for these metals. Most of the mines that produce today's platinum and palladium are very deep and high cost, and we've seen not only no growth but actually falling supply, particularly out of the two dominant producers, South Africa and Russia. So it's almost set up a perfect storm, if you will, for the opportunity for higher prices for these metals. What's interesting is that the recent strength in the U.S. dollars has kind of clobbered the entire commodities market, irrespective of fundamentals. And we've seen, with the drop in gold and oil and copper, we've seen even platinum and palladium, which have such strong fundamentals, fall along with them as that U.S. dollar has strengthened and these commodities are priced in U.S. dollars. So a lot of analysts believe that we're setting up for even greater pressure on the losing money up mines down in South Africa, and that this is really positioning people who are looking at the PGM space in particular for potentially a much higher move in prices just to sustain the current operations, let alone to incentivize new production coming to market.
And in the PGM market, if you're looking to invest in it, there's very few opportunities. Talk to us about the opportunity with Wellgreen Platinum, some of the goals, some of the catalysts going ahead in 2015.
Yeah, your point is an excellent one. If we look outside of South Africa or Russia, you've literally only got a handful of names that have exposure to PGMs in say, first world jurisdictions, and a couple of those are producers. So your exposure is mostly metal price rather than growth, through advancement and de-risking. So with Wellgreen in particular, now that we've completed this major substantive update in terms of what the project looks like, we'll be moving to that next level of study, pre-feasibilities and feasibility over the next 2 years. And that's going to entail additional drilling, additional metallurgy. We've got a number of opportunities that are quite exciting that were identified in the PEA. One is that the base case is only predicated on 34% of the resource being utilized for 25 years. And the other 76% of that basically is an opportunity to either extend the mine life at those high levels of production for another 20 years, or to even expand it further, in which case you move from kind of 200,000 ounces a year of platinum and palladium to 350 or even 450,000 ounces a year, which would make this clearly one of the very largest producers. And then looking at the nickel that comes along with it, because nickel is about half of our operating cash flow at spot prices. When you look at that as well, as particularly at the expansion cases, this could potentially be the second largest nickel producer after the Norilsk mines in Russia. So very, very significant levels of production. So those studies are going to be coming out over the next series of months as we begin drilling again on the project, as we begin to look at refining our understanding on those opportunities that have come out in the study. And I think it's going to be a pretty exciting year of activity for us in 2015, looking likely in the first half of 2016 in an updated study to be a pre-feasibility and potentially beginning feasibility work later in 2016 or 2017.
Greg, as we conclude, right now we're in, as you mentioned before, a very difficult bear market cycle in the junior resource sector. You've been in the mining business for a few decades now. Talk to us about where you see us in the cycle and what makes Wellgreen so unique in the junior mining sector.
Yeah, I think one of the things that's really interesting, after you spend, a couple of decades in the cycle or in the mining sector, you start to realize just how cyclical our industry is. And, we go through these periods of undervaluation like we're in today at the end of a grueling junior mining bear market. And then we go through these periods of euphoria when we get to the tops of these bull markets, as we were, not that many years ago, back in 2011, '07, and looking back further, such as 1996 and earlier. And so if you look back over the last 30 or 40 years, what you realize is that the mining sector goes through these, fairly predictable cycles of moving from overvaluation to undervaluation and back to overvaluation. The current cycle we're in is one of the longest corrective periods in that last 30 years. It's on par with that 1996 to 2001 time frame, which many people remember when everyone thought the mining sector was going to go out of business. Of course, these are basic materials that we all need, and they go in our technology, and they go in our wiring and other fundamentals of modern life. And so coming out of that cycle in 2001 to 2007 was one of the biggest bull markets ever, that followed that. And today, we're, in terms of the depth of the correction, it's very similar to the average. The length of the correction is one of the longest. And so in many ways, this is setting investors up, if they're looking at high-quality names in the sector, for what should be a very constructive and profitable period as we move into the next cycle upwards. The average bull market is over 50 months in length, and in terms of percentage gain, the average is about 200+% gain for a sector average like the venture composite. So, I'm actually fairly bullish that I don't know when it's going to start, but that we're very long in the tooth in terms of the length of this correction. It's about a typical depth of correction, and that we, at some point here, will start to see the sector sentiment shift in as we shift from bear market attitude to bull market attitude. And I think this is an excellent time for your listeners to be looking at good quality names, companies that have built fundamentals that are going to position them to even outperform the broad indices. And it's really difficult to see the valuations getting much lower than they are today based on historic standards. And it's pretty easy to see that even potentially with the recent changes we've seen in the market, that we may be at the beginnings of the next upcycle.
Greg Johnson, CEO of Wellgreen Platinum, which can be traded as WG on the Toronto Stock Exchange or as WGPLF on the OTCQX. Thanks so much for being back here with us today and for giving us some insights into the cycles and into Wellgreen Platinum.
Well, it's been a pleasure. Always enjoy providing you an update, and I look forward to updating you again as we begin to launch into our new programs.